Hello everyone, welcome to the channel. Yesterday we had a very clear discussion that if market taps this demand and gives a positive reaction, we would be interested to take the market up. Exactly what has happened. I also told like we will wait for 1 minute confirmation. You can check the trade recap video which I had posted today on how I had planned my trade and how market behaved and how we got the confirmation. Every detail will be available there. So tomorrow it is going to be very simple. This demand yesterday, whatever demand we had marked in 15 minutes, has given a positive reaction, right? And it has left one more demand here in this particular segment. So tomorrow, if market opens flat and if it comes down, I'll be again monitoring in 1 minute time frame. If I get a small positive confirmation, I'd be interested to take the market higher. So from here, so this will be my ideal position. So I'll be planning a long position here. If I get 1 minute confirmation, I'll keep my stop loss here and I will target this. This itself is a 3.2. This is enough for me for tomorrow. Reason being, this is an open supply which the market has left open today. Although this will not be very effective because it has not given a breakout structure, still it is ideal to target this as a target. If market breaks this open supply and goes above, then we can see extended targets at least till this swing point, till 25,943 or even till 25,930, because there is a lot of liquidity here. What I mean by liquidity is, if you see this area, there are a lot of equal highs being marked out here in 15 minutes. Equal highs are nothing but liquidity according to market. How market will react to this liquidity is, generally when market reaches any kind of liquidity point, it will provide an inducement saying like, okay, market is going to react and go down, then it will start moving in the direction which the market tends to go. So it is better to close the position in this particular place, targeting the swing point of today's high. If market opens flat and if market comes down and gives a positive reaction from the demand which it has left open. So this will be my ideal trade for tomorrow. This is for flat scenario and coming up. What if flat scenario and going up? In this case, I'll be monitoring. If market gives a negative reaction from this place, then I'll take the market to this particular open demand. See, it's just the opposite. Why we are doing like this? Understand why we are doing this. Whenever market wants to go in a particular direction, it has to come and react to orders. What are orders? Orders are nothing but when a market has, if a big institution buyer has come in this particular place, and this particular place, a big institution buyers with crores and crores of money has entered. So when he has bought so much of quantity here, all his position, all his quantities might not be fully filled. And that is why you see this huge upward movement and a small choppy movement back to the downside. The moment it reaches here, all his pending orders which it has left open in the market might get filled and market will start to give a new reaction based on the orders. The reason why I am targeting the downward direction is I want the market to come back to the place where market has left open orders. Either from flat going up, I'll be monitoring and checking if I can short it till here, or if it comes down, I'll be looking to long it till here. Simple. Okay, so what in case of gap down? Gap down, I'm going to avoid completely. If it opens gap down below this particular range, and if market, only if market comes above this supply, then I'm interested and see if market reacts and continues to go upside, only in this case. So I will give enough time to the market, probably around 1 hour time. If market opens gap down, very big gap down, okay, and if market stays above my opening price itself, then I'm interested to take the market higher. SGX Nifty at the moment shows around 100 to 120 points gap up. If we just take as such like from 25,820. If it is opening 25,940 as gap up, again my situation would be like how market is reacting in this gap up scenario. If market is going up, let it go up. Probably tomorrow I may skip this trade unless or until I get a negative reaction from this supply. If that is achieved, then I will target till my open demand. What I mean by open demand is today's closing will act as a open demand. In that case, market need not come all the way till here. It can at least come till this yes, today's high, or even till today's closing. That is how market will react before going up. Just summarizing: flat coming up, look for positive reaction from this demand, take the market higher. Flat going up, look for negative reaction from this supply, take the market down. Flat, if the market breaks this and goes up, I might skip for tomorrow, meaning like if market opens flat and breaks this, then I might look for some kind of reaccumulation here before taking the market higher. That is going to be very, very slow process. I don't want to trade in such kind of a slow process, because there will be huge decay which will be incurred, and in case of huge decay, there will only be losses as being an option buyer. So better to avoid such trades for tomorrow. And flat coming down, yes, we discussed this scenario. I'm just drawing it for your understanding purpose. Flat going up, flat and going up, look for negative reaction. And if we get a negative reaction from this, look for shorting the market. That's it. Gap up, look for negative reaction from this particular supply. If it opens somewhere around 26,000 and we get a negative reaction, I'll be looking to take the market down. So in case of very big gap up, always give time to the market. In case of big gap ups or big gap down, give enough time to the market. See, market is not going to go anywhere. Don't have any kind of FOMO. Even today, if you see, my trade entry point was only around 10 o'clock and my closure time was around 12:30. The trade time was only 2 hours. Okay, but we need to give this time for the market, so that market will give you a trade. You should not predict the market, you should only react to what the market is doing. And if the market is reacting and saying that I am going to go upside, you go along with the market. The market is reacting and saying I wanted to go down from this place, you go along with the market. That's all. Don't think like, okay, if market is going to go higher than this, market will go up all the way. It can react from this particular liquidity point and it can again come down also. There are high chances. This is a probability game. When it comes to probability, what is the best place, best thing to do is to reduce your quantity size and manage your risk. So keeping the video short, if you like the video, please do comment and share to your friends who will be interested in such kind of educational content. Thank you so much. We'll meet in the next video.